Hello and welcome. In this on-demand video, OJM Group partner David Mandell outlines 3 significant ways that physicians are different from average U.S. investors and why these differences should matter to doctors and their financial advisors. If you have more questions or want to learn how to incorporate this topic into your financial strategy, click the link below to schedule a complimentary one-on-one consultation with one of our experienced team members.
Thank you for joining today. This is David Mandell, one of the founding partners of OJM Group. Okay, so why are physicians unlike average investors? Number one, financial circumstances. Okay, I have some references here, some footnotes, but essentially it's pretty simple. Physicians make a lot more money and have significantly higher net worth than the average investor in the U.S. Here are the stats. The average median household income is around $50,000, whereas the average physician's income is 6 times that. And for the top 5 medical specialties, it's closer to 10 times. So just a different world. And one of the places that matters, again, I could do a whole 20, 30-minute webinar just on this, but one of the places where I'll just briefly go over is taxes. And in a lot of the financial media that physicians consume, even sophisticated stuff, they only really focus on taxes in the week of April 15th. The rest of the year, it's really not that important. Most investment fund performances are all pre-tax returns. So they don't even give you a sense if you're a high income taxpayer of what you're netting out. Mutual funds is one example of that, again, subset. They avoid disclosing their internal holdings and their built-in unrealized taxable gains. So new investors cannot even understand the tax hit they will get when they buy into the portfolio. What basis are you buying into, and how much built-in unrealized gains that you're going to have to pay tax on potentially, but you didn't get any benefit of because it all happened before you bought in. There's lots of examples of how taxes are not given enough, or the amount of thoughtfulness in product design in the investment world, or journalism, or in what physicians would want to see compared to what is important to physicians. And that's because, again, incomes are different, so they're not really targeting mass-produced either media or financial products, this kind of marketplace where the taxes are so much different. So that's one thing to keep in mind. It's one way that you as a physician are not similar to the average investor. Way number 2 is amount of free time. And probably, I don't have to tell you that, you're online here, doing some learning, which is great. And my guess is it's after hours. It's not during the hours you see patients. Of course, COVID has kind of changed that. And a lot of our, over 1,000, close to 1,500 physician clients have had more time, not by choice, because of, all the different changes that COVID's put us through. But in general, again, just get to the data, what the average person works, the average farm, on-farm work week, and the AMA report on how many physicians actually work 40 hours a week. You probably are nodding your head. You understand that in our view, working with physicians for 25 years and having thousands of them as clients and having them in my family, time is the most valuable resource that physicians have because they don't have a lot of it. Now, why does this matter in investing and in wealth management in general? It means that physicians are challenged to find time to focus on, any of the wealth management issues that they need to get to. In fact, just this week, orthopedic surgeon, OBGYN couple, a client who I've actually had not only at OJM Wealth Management, but did legal work for. And we were looking at an annual review, and we were saying the same to-do list that was on the list last year was still there this year. Because, busy practices, busy with family life, busy with lots of other things. And oftentimes they don't get to all the things they should be doing in their wealth management. And this can actually make a big impact because you leave significant decisions off, you leave significant actions to take to the future. And at some point that catches up with you. So there's additional challenges to managing physicians' wealth. One, because they have a lot more than the average wealth, and two, they have less time. So this is something you should acknowledge. And there's too many docs who, try to do it all themselves, and that can be a problem. And that leads to number three, which is your highest and best use, or your opportunity cost. One way to look at it, positive or negative, which really means what's an hour of time, what's a day worth to you in terms, just from an economic point of view. Obviously, we don't know how long we're going to live, so there's all those issues in terms of the value of being a human being on this planet. But from an economic point of view, there's a reason, my guess, that all the physicians watching this, that you don't answer your phone at your practice, that you don't schedule appointments, that you don't do the billing and coding yourself. And then even for medical, certain medical procedures, you outsource that to a nurse or a PA, because they can do it effectively and efficiently. We want to use the physician's time as efficiently as possible. As a lawyer, same thing with paralegals, assistants, etc. So too many physicians, unfortunately, don't apply that kind of smart, highest and best used opportunity cost thinking to their own planning individually. They may apply it to the practice, but they try to do a lot of things themselves that may not make sense for them to do. Rough back of the envelope here. Most physicians that we work with work somewhere between 200 and 250 days a year. That's a 50 week, 40 hours, or 50 weeks at 50 hours, somewhere in that neighborhood. And income ranges, again, most doc clients, their income ranges between 200,000 to $1 million or more. So certainly plenty of clients with over $1 million. And so, but just cutting that off at $1 million, you do the math, it's about $800 to $5,000 per day is the value of the workday to the physician, meaning that's what they can generate in terms of at least revenues. In this case, personal revenues, not before taxes, but after all expenses. This is their personal income. Their personal income ranges between 200,000 to $1 million. So the opportunity of using a workday for non-best use activities is in that 800 to 5,000 or more. Now, that doesn't mean you shouldn't take vacation. That doesn't mean you don't want to avoid physician burnout. That's not the point. Where this matters in investing is how much do you want to do yourself, right? Are you a do-it-yourselfer that does everything from fix the leak in your plumbing to mow your own lawn to do your own taxes to manage your own investments and figure out your own asset protection and your own financial modeling and all of that? Or you're someone that outsources all of that, right? There's a spectrum. And we have clients probably more to the outsource, because obviously they wouldn't be hiring lawyers and wealth managers if they didn't have some of that. But there's also clients who do some of it themselves, and we have to incorporate what they're doing in the larger picture. We estimate for an individual, it would take 1 to 3 days a month to actively manage a portfolio, research, risk assessment, trading, rebalancing, tax loss harvesting or gain harvesting, all that kind of stuff. And again, that equates to a time cost of between $12,000 and $180,000 a year. Meaning, if a physician is going to take time out of their practice, or going to do this activity when they could be using it as their highest and best use, this is what it's going to cost. So you got to ask, is it worth it? Am I paying my wealth manager less than that? It's probably worth it. That's why people outsource, leverage advisors. So the cost of do-it-yourself investments are extremely high for physicians because of their highest and best use compared to the average investor. And that makes sense why a lot of physicians do outsource significant procedures like managing assets, like their legal work. Certainly you could create a will, do it online, legal Zoom, their tax returns, things like this. Now, let's turn to why and how physicians are like average investors. Well, we're all human. Professionals who do this, clients who do this, non-professionals who do it as clients. We all have our brain. Some are, maybe in better shape than others. Some are younger than others, etc. but we're all limited by this. And there's a whole area of science dedicated to studying how our brains impact the wealth management decisions we make and other kind of economic decisions. It's called neuroeconomics. And as we, have come so far in all areas of medicine in the last 20 years with technology and going even farther, right, as we go forward, the same thing can be applied here. There's really interesting studies about how our brains help us and hinder us when it comes to investments. And it's kind of the, all of economics, it becomes kind of the overlap between economics, neuroscience, and psychology. And the neuroscience stuff is incredible. So I won't get into all of this, reflexive versus, reflective brain. It's basically, reason versus reason up front, fear in the back. You'd be surprised, or maybe you wouldn't be, how often in experiments and in real life, people are going with their gut. People are not making rational decisions. They're acting out of something other than that, emotions. And it's just part of how we're built. If you're interested in learning more, Your Money and Your Brain is a great book that I would recommend you get. And certainly our book, Wealth Planning for the Modern Physician, has a whole chapter on this and some interesting experiments that show that your brain, when you're thinking you're about to make money on a good stock tip, it's the same fMRI as someone who had just taken some cocaine. So keep that in mind. There's some interesting studies. I think that was Stanford, but I can't remember where university they showed. So you got to watch out for them. Now, what does our brain get us into trouble? One of the ways, and there's a lot of ways. In fact, in our book, we talk about the SEC, Security and Exchange Commission, commissioned to study thousands, if not tens of thousands of trading, and they listed out 10 problems. Recency bias to things or you think like medicine better, and it gets people in a lot of problems. But I think the main overarching theme is this: the greed and fear, the greed versus fear kind of oscillation. Things are going great, people get greedy, they want to pour money into higher risk investments. Things start to look poorly and go down, and they got to get out because they're scared. Fight or flight mechanism kicks in the brain. And if you do that, if you buy as things are going up and you sell as things are going down, you will repeat. You will go broke eventually, right? So I think it's a good, just easy thing to keep in mind. And we saw some of that just this year with COVID, and obviously a high flying market before COVID hit in March, and then some significant downturns. And we had to talk to our clients about not making fear-based decisions. Doesn't mean we didn't do anything. I've got a whole nother webinar or a video on that, 7 things to do, actions to take during COVID. So it doesn't mean do nothing. But our clients who avoided this, and thankfully the vast majority did, who didn't succumb to that fear, then at least, thus far have really been rewarded for that. And I think you're always rewarded, even if you're doing some selling, you're not doing it out of fear. It's got to be rational. So we're all in this boat. Physicians are part of that. And this is just some data. There's lots of it out there. I won't spend a lot of time. This is one study for 20 years just showing how the average retail investor did. That's down here in the red compared to all these other asset classes over that time period. And this is getting a little dated now, but I'm sure we can find some updated data. But you typically, retail on their own investors do not do very well because of some of the limitations of the brain and just not doing it full time. So anyway, that's one piece of data for you that you can take on. And here's a lot of other studies. The Dalbar study is a very famous one. Again, I should probably update the slide, but every year it shows kind of the same thing. And the Morningstar Mutual Fund study from 2000s, this was, I use this a lot, around 2829. But all of these studies, different time periods, et cetera, will basically show that oftentimes time in the market is a lot more powerful than timing the market, which really nobody can do with any kind of long-term predictable success. And fear and greed and other things often lead to trying to time the market. So what's the conclusion here? Physicians typically have a lot less time to manage their investments and their overall wealth planning than most U.S. investors. They have much higher opportunity cost of that time because of their highest and best use. Many financial news, much of it, and many financial products are not geared to physicians because of the financial circumstances, and one of those is taxes. There's plenty of others, and this is just the tip of the iceberg. On the other hand, physicians are not immune to the failings of our brains when it comes to investing in money. None of us are. Even as professionals, we have to make sure we check ourselves and don't let our emotions take over. And again, we're all about, at OJM Group, education. And we always recommend further education, whether it's here on ViewMedi, or getting our books, or having a conversation with us, or reading any of our articles. We want our physicians, all physicians, to be well educated, and certainly our clients, part of what we do, in addition to help manage their wealth and being their partner in their wealth planning in their life, it's also to educate them on areas we see as important. So hopefully you found this helpful, and you can stay on. We'll tell you about the books and how to get them. And I hope to speak to some of you individually. Thank you.
OJM is a multidisciplinary wealth management firm. For nearly 2 decades, our firm has helped physicians across the U.S. reduce taxes, protect assets, and achieve their financial goals. OJM Group offers viewers a complimentary consultation where we can answer your questions to see if our firm might be a good fit for your situation. Simply click the button below to schedule your free consultation. We hope to speak with you soon. Thanks for watching.